Welcome to Superhero Conversations, a podcast saga with innovation leaders who are at SuperNova, the #1 tech innovation event in Benelux, happening here in beautiful Antwerp, Belgium. And in today's episode, I'm welcoming one of the superheroes of the Belgian startup ecosystem, Lorenz Bogaert, the CEO and co-founder of StarApps. Welcome.
Hi, Dominic. Thank you. Thanks for having me.
So, Lorenz, I think you have a quite extensive story that you can tell us today, but I really want to focus on some practical and interesting examples from your career that all of the founders, investors, maybe even politicians can take away. So first, could you please give a quick overview of how did you end up where you are now?
Very brief story. I was a student entrepreneur in the 90s already, so I'm getting quite old. But in the 90s, I started setting up the first companies, a lot of pet projects, just for fun. At some point, I met Toon Coppens. We built a couple of social networks. We all merged them together to become Netlog. In 2006, we are now. Netlog was one of the largest social networks in Europe. Our competitor was MySpace. At some point, MySpace was acquired. We weren't, especially because we were, hit quite hard by the financial crisis 2008. We then saw Facebook coming, Twitter coming. We pivoted the business to a dating platform called Twoo, TWOO. We sold Twoo to the company which is now Tinder. The company on top of Tinder. Which is Match Group, sold that. I think it's 2012. It's more than a decade ago, I would say. And then from there, we started setting up some other ventures, spin-outs. We created Delta, cryptocurrency tracker. We created Realo. It's in a real estate data platform. A company which is now called Raidu. So all companies which were acquired by now, and that's the serial entrepreneurship story. And then at some point during COVID, I decided to take it a more structured way and create StarApps. StarApps is a startup studio where we create companies from the -1 phase, especially to one. So our focus is on getting them to the first million ARR in the first instance. And basically that's having a lot of fun. Yesterday we launched our 6th venture named Cashfeed. I think we will be at 9 or 10 this year. And our goal when we started it was to create 10 ventures in Ghent, Belgium, all. Maybe there may be one exception in Antwerp, so that's what I'm doing. And we also have a fund, an early stage fund called Pitch Drive, but I think my brother was also here already.
Yes. So I would ask you about the startup studios because many people don't know what they are. They know what is a traditional venture capital fund, but how is it different and how is it better or not better?
Well, it depends on for everyone, of course. I'm sure there's founders that would not be compatible with the concept of a startup studio. But for the majority of founders, especially first-time co-founders or founders, entrepreneurs, it's definitely a very good model. It's also been proven. All the statistics show that these companies have higher exits, get faster towards higher exits also. Get more access and faster access to funding.
And what is the concept? What is the concept?
The concept is, for example, at StarApps, you go for a 100% success rate. It's only 10 ventures, but still guaranteeing success, or at least going for 100% success. It's not what a VC typically does. VCs will actually have a much higher fail rate. Why can we go for 100% success? Because we filter out already a lot of the failed concepts in the studio itself. So we only launch 1 out of 10 ventures that we research are we actually launching. So that's concept that we have.
Fantastic.
And that's the concept of startup studios. We were, I think, one of the first in Belgium. Now there's many more popping up, and they're also getting quite successful. The difference with StarApps, with our startup studio, is that it's self-funded by by myself and co-founders, Nicholas, Toon, and Vincent. So we're 4 co-founders. So we self-fund the studio in itself. And that's also quite unique, I think.
So you could describe Startup Studio as a kind of a playground where the founders are playing and building stuff with almost certainty that you will help us, and they have the network around that.
We will help. That's definitely sure, but it doesn't necessarily mean that we will create a venture.
Okay.
So it's only when we have a great idea, when you have very important for us is founder market fit, and make sure that there's a good fit between the product that we're building, the market, and of course also the founders. And when all the stars are well positioned, then we will go to the notary and actually give the keys for the company. You can say all the shares, not all the shares, but the majority of the shares, the majority of the board. They all go to the operational co-founders of the company.
I'll have a question that is quite controversial, but who do you think will become the next unicorn from your portfolio companies?
I know they're all capable of becoming unicorn, but to be very honest, for me, it's not an aim. It's a very personal aim for every of the co-founders. I know there's some of them, they say, oh, we will be the next co-founders. Like the busy guys are definitely very, very much unicorn focused. I think they're all capable of becoming it, but I think it's a little bit overhyped. We all have to become unicorns. It really depends if you have a big problem for a smaller market, then it's much more difficult to become a unicorn. So you don't want companies only to focus on massive problems that are only in very big markets. We really have to avoid that.
So is it okay for a company not to become a multi-billion-dollar success story?
Well, it depends, right? If it depends on what you want to solve and what your business model is, and it's not all about the money. It's really about solving a problem in the first instance. And I think somewhere over the last 10 years, it's a little bit going wrong, where it's all about not about solving the problem anymore, but about getting massive funding. And if you want to become a unicorn, I always tell it to all of our companies: if you want, tomorrow you're all unicorns, and I give you, for example, 1 million, but with a liquidation preference of 10x or 20x and the valuation, I don't care anymore in that case. So it really depends also on the terms that you get. We shouldn't, when you read, they had this valuation, there's always a story behind it also, which is not necessarily, you don't want to raise too much also. I think it's quite important, only raise what you really need is definitely important also.
And for all the founders that are raising in 2025, maybe you could give an advice. What should they look out for? What do investors, and don't give any of your secrets, but what are investors kind of putting in the term sheets that the founders should avoid in 2025?
Well, these days, I think in terms of secrets, everyone is typically talking to multiple parties, getting multiple term sheets. Everyone is well backed by lawyers, also, which not 20 years ago that wasn't always the case, by the way. But by now, everyone knows that everyone can put the term sheet that they receive in GPT, by the way, and many of them do. And then they ask, what are the pitfalls here? What should I look at? So they're most founders, I think most important is that you have the liberty to sell the company when you want to sell it as a co-founder, because it's a very personal thing always. You set up a company and at some point, whatever the reason is, you want to sell. Whether the company is in a big traction mode or having more difficulties, doesn't really matter. It's a very personal choice of the different co-founders to decide that, and they should have the liberty to do that. So I think having a drag-along ride for the majority is typically something that we always advise for. It's founder-friendly also. and it would be very unfriendly for founders to actually try to block that kind of stuff.
And this is the question from your brother. I asked, what should I ask you? Which he's also a VC, a really big player in the Belgian startup ecosystem. So what's your take? When should a founder step down from a company, and when should a company hire a new CEO?
Well, the question is, if you ask when should the company do that, typically if the founder is in a majority position, it's very difficult to do it. And normally you also see that when founders leave the company, it's when they have a minority stake. I'll tell you something, I don't think I ever told this, but at some point during the Netlog, when it was getting tough, it was also getting very tough for me personally. And at some point I resigned in a board meeting. I just said like, hey guys, we have to find someone else. We then started looking for someone. In the end, didn't really find someone, and then we started I just got it back. I said, okay, let's just pivot the business towards dating. And we did a couple of things, and then finally ended up in dating. But there was a time when I was like, oh, this is not fun anymore. This way, it's all about cost cutting here now, and it's fierce competition and where we were always used to getting like, hey, you guys are doing so great, and all of a sudden it's what's going on with these guys. Okay. So it was a tough time. But as you are in a majority, it's very difficult to. When we had a majority, Toon and I, and a big majority even, it's very difficult to say, I'm going and I'm going to leave the keys to someone else. But to be very honest, we should have done it, but it's very difficult to do it. Okay. And
so with the company should, first of all, is it possible to leave when you have the majority?
It's difficult. It's more difficult. I'm not saying it's not possible. It's more difficult when you see founder CEOs leaving or taking another position, but most of the time leaving. It's often when they don't control the company anymore, and then it's the board, the VC, who says, hey guys, that's typically how it goes. I'm not saying that's how it should go, but that's how it typically goes. If you look how it should go, there is, but the problem is you only learn it with age. There is a Peter principle, and everyone is subject to it, and myself also, of course. And I know I'm like I like the -1 to 1 phase. And when it gets like 50 people, 100 people, 150 people, I'm not the right guy anymore. It's just not my favorite thing anymore. I just don't enjoy it anymore. And then you should definitely be going. And I think the answer to your question is when you don't enjoy it anymore, when the CEO doesn't enjoy it anymore, that's when it should happen. And when I said I want to go and I actually resigned, I don't understand why. Finally, I think a couple of months later, I was still there, and the company was thriving again, and we had found the mood was there again. We had a lot of traction again. I just learned from all the mistakes we made, and I said from now on, it's a clear vision. We want to become the #1 dating site in the world, and every week or so, I sent an email to the whole team, giving a whole status of how the business was doing and where we were in achieving this goal. And it was a trackable goal. Everyone knew, okay, we started at position 5,000, 4,000. And there was like, and then in the end, of course, when we were #1 or 2, we got acquired because, of course, if you grow that fast, you got on the radar of your competitor.
And does it mean that in a time that you feel, or a founder feel that he needs to leave the company, is it that the mission on which he's on is not clear anymore? Is it that when you were resigning from Netlog, you did not understand where should you go next? Or
no, you just feel responsible for failure, right?
Okay.
I think that's the main thing. It's at some point, and everyone has it. I don't know any founder or any entrepreneur who never had major setbacks. And to the ones who didn't have it yet, I always say it's gonna come. There will be a moment when there is all of a sudden litigation that you didn't expect, a competitor popping up that you didn't expect, a big contract or a couple of big contracts all of a sudden leaving, your team leaving massively all of a sudden, or another company being more successful, stealing your team almost, I would say. All the setbacks, everyone has it. It goes in phase, it goes up and down. And I think I don't remember what your question was anymore, but I hope that answers
I think that my question was that the meaning is kind of lost when you're wanting to go out of the company, and it also kind of corresponds with your answer of you have major setbacks, and you have so much responsibility for all of the other employees, but also for the investors.
Yeah, indeed.
And that is kind of scary.
It's how you feel. You feel responsible for your team. You feel responsible for a whole ecosystem, for your investors, for your co-founder also, by the way. I was not alone in the company.
Yes.
We were actually forming a team. And, I'm talking very much in the past now, but we also have seen it in at more specific at StarApps. We've seen it also, by the way, when when the founder dynamics are not correct. That's also a biggest issue is, if we see, is a biggest fail or origin for failure often is founder issue. So now I think if we look at companies, the quality of the founders always, of course, that's normal. That is very important. But also the dynamics between those founders. What would they do to achieve the vision, to actually make it happen? What is their level of resilience? And also between them, because it's gonna be tough at some point. They will like hate each other at some point and like, what the fuck? But how strong is the connection? And how will they be able to handle setbacks, which eventually everyone will have?
And let's kind of dive into that topic. You mentioned the relationship dynamics inside the team, and I think there is enough that has been told that team compatibility, different skill sets and so on. But let's talk about the dynamics inside team with the investor. You've been kind of on both sides, and maybe you could bring out main failure kind of points and main kind of stress points where that relationship could fail between the founder and the investor in different variety. Is it from the first approach? For example, you're approaching a VC, you're raising funds, and when does that relationship break? Even if it has not formed yet. And for example, let's take the exit situation. What are the stress points with the relationship there?
Well, I've as a founder, I've always had very good investors. Let's say it like that, who were thinking with, who were helping, who are founder friendly. At Netlog, it was and at Two also, by the way, it was Atomico and Index Ventures. Of course, also with PitchDrive, you have to put yourself in the situation of a founder. I'm not going to say like him, but support them in the first instance. But at the same time, there is a conflict of interest. There's a very natural conflict of interest between the co-founders who want to achieve their dream, which is not necessarily an exit, and an investor who typically is mainly interested in making sure that in the end, especially in the end, their fund achieves certain metrics, certain IRRs, and things like that. And it's a huge conflict of interest as an investor. You have it, and the founders also know that this conflict of interest is there.
And let's take that.
Well, as an example, at some point, again with Netlog, and use that as an example because it was a sometimes even traumatic experience for me. In 2008, we had a term sheet. We're like almost accepted an offer from a company, like very nice valuation. And then our investor said, "Hey guys, this nice deal, but it could be so much more if we actually put a competitive process in place. And then, started talking to JP Morgan, who are actually, it took so much time, like getting all these people on board, like making new management presentation, talking to some other companies. And the original company was still interested, of course. They remained there. They said, okay, our offer stands, but it took time. Valuable time. And all of a sudden, the financial crisis 2008 is there, and offer is off the table. The company was actually putting the proposal there, said, hey guys, we have to fire so many people. I still remember when I got that phone call, it's like a whole house of cards, yes. A big collapse of what the it's not happening anymore, getting back out of that, when you're in there, it's like, at the same time, everything starts like going into a negative spiral, and a very, very. It's like it doesn't stop. The bad news doesn't stop anymore at some point. So that's definitely something which I don't want to experience anymore.
Yes, and let's take
there's also good things. I'm just giving an example. Bad. Now it wasn't bad. It was just in their interest. It was a very nice multiple for them, but it could be much, much nicer. And they're probably right. They were probably right. They couldn't imagine that all of a sudden there would be a credit crisis, things like that.
Yeah.
But they also gave very good advice, which often then I didn't listen to, when I should have listened to it. So
I couldn't imagine. You have an offer on the table, and you were told to wait a bit, and that offer leaves. But eventually, so 5 years later.
Yeah, but you're a lot of time, a lot of years later, we've completely have to pivot the company. We then got. But I can tell you the first offer we got. No, I think we increased the offer with 20-25% or something like that. But we took it then. We said, okay, it's fine. Let's just do it with a huge earnout, way too big earnout, by the way. But still, it's like at some point, we have to close this, and I had to mentally close that phase, that episode of my life, that company. And then start new things, and that's what we did. So
that's how you ended up here. Yeah,
that's indeed.
Let's dive into the topic of actually receiving funding. Many people talk about how to get the funding from a VC in different stages and so on. I would ask you, when do you think a company, a startup, should not take funding from a VC?
When they don't need it, right? If you don't need any funding, I think it's very logical. Don't do it. I raised funding when we didn't need it, and I still regret it. The first many times we raised when we didn't need it. But when you raise enough, I would say. Make sure that you have a little bit of reserve also in there. A war chest, as I say. But if it's not needed, it's nothing nicer than a company not needing funding and immediately having traction and users paying, and that for us it's always the ideal scenario. That the customer actually pays for the growth.
And what problems arise when a company raises funds?
Sorry,
what problems are there when a company raises funds when they don't need it?
Well, typically you get like in the cases when this happens is when companies already are very much cash flow positive, so they don't really need it. These companies are often potentially could just exit already, but then they go for a bigger dream, but it actually, with all the problems that you add on to it, you get more funding, you have to see the story bigger, you start automatically making debts again and making losses again, because of all the funding that you receive, you start spending it, you make losses again. It's not necessarily the right thing if you have a company which is already cash flow positive. But to be honest, a couple of times in the past we did it that way, and I regret it. When you really need it, of course, go for it, and and try to get a good deal. And don't only look at the valuation, but also look at the terms, because that's also quite important. Are these terms founder friendly? Valuation, you can do anything and just fuck it up. As I already said it with founder unfriendly terms.
Absolutely. We already talked about your failures in
Thanks
your
a lot.
career. Yes, quite a lot. That's fantastic, because the failures are where our listeners, our founders can also learn from. But what are the mistakes, examples of mistakes that your portfolio companies made that could have been avoided?
Well, portfolio companies within StarApps or PitchDrive or just in general, I think from the past, it's always been wanting certain things too much, and it's like you're on this roller coaster, and you start closing deals in sales to customers who actually don't need it, or you start increasing prices so much because you just need the revenue then, but it comes back as a boomerang, all these kind of things. Or your viral growth hacking, by the way, it's also something where you start exaggerating, it's getting out of control, because you have the growth, it's nice, but there's always a cost when you cross a certain line. And finding that balance is probably one of the most difficult things as a co-founder, as an entrepreneur, because you want growth, you want it, you want to achieve certain targets. So we want to be at 2 million by the end of that month, and at 4 million at the end of that month, and we want the 5 million milestone at the end of the year, things like that. That's where you want to go. And if you want it too much, you start sometimes doing crazy things that you regret afterwards.
Okay, that's kind of the over exaggeration, overworking, overachieving can actually, I think in the beginning, this is what you actually need, but when you have already some base, then you're kind of used to this kind of way of working and this way of achieving goals.
Correct. It should be in the beginning, it's like very opportunistic.
Yeah.
But at some point, it should be engineered, your growth, and engineered in a way that it's well balanced and that it's aligned with your long-term vision, which is, of course, as a startup, you don't care so much about. You just want this first customer, and he needs to sign or she needs to sign, and you want the signature, and you want the reference, of course, and then grow from there. But there's times that I really had in myself, and also seen it with other companies, that you go too far in wanting to achieve certain numbers just because they're like the target milestone. They are important, but you shouldn't do it at all costs. That's for sure.
Let's talk about mafias. Not the Cosa Nostras, but the technology mafias. We know about PayPal Mafia. That's basically all of the early team of PayPal has actually, founded so many companies that form the technology industry today. We can see in Estonia, for example, the example of Skype Mafia, that you're basically from a company like Skype, the early employees actually made on and founded tremendous new companies.
And invested also in a lot of those companies.
Absolutely.
Also in ours, by the way. Indeed.
Fantastic. And then we have the Netlog Mafia as well. So my question is, how did you attract all of the great talents? How did you become a magnet for all of the entrepreneurs that now basically on whose shoulders is the whole Belgian startup ecosystem?
I hope I don't disappoint you, but it's really unwillingly. It's not. It just happens. It's of course we were very very much selective on the people and growth, actually, especially when a company starts growing. Smart people know that's where I have to be for my career. That's where I have to be to learn certain things. So it goes quite automatic when you're when you're a fast growing scale up. It goes quite fast, and but there's by now there's so many mafias and they're all connected. In Ghent, for example, we call it almost the Winter Circus Mafia now. There's the henchman or the hench gang henchman mafia. There's the Silverfin Mafia. There's Showpad Mafia. The Matthias is also doing a lot of angel investing and also continuously supporting the ecosystem, not just from Lighthouse. So there's like many mafias all acting at the same time and giving so much back to the community. It's really great.
But you think that it's not an intentional kind of way of thinking that you want to attract the best of the best from the local ecosystem, but it's that the people who are the best of the best, they want development, they believe in the idea, and if your idea is good enough, if your idea is big enough, they will come to you.
Yeah, it's that's for sure. Of course, you need to explain it well, and it's difficult early stage, especially to attract talent which has experience, especially in B2B SaaS, the sector I'm mainly active in these days. Customer success, for example, is very, very, very tough to find the right people. And I remember when, at some point, the guys from Showpad, which are also they were employees at Netlock first, and then they left to set up their own company. They really have been hiring so much out of our own company. At some point, oh my God, not again. every sometimes 3 or 4 a week, not again. And a lot of good guys, of course, and girls. But there was. By now, we are attracting a lot of talent from Showpad again, and they are now trained, very much trained in B2B SaaS in a completely different way. So, and I think it's important that it's like this.
It's a continuous cycle.
Yeah, because when we started, it was very difficult to attract the right talent, to attract people with sales skills in digital, with marketing skills in digital. We at some point we actually opened office in London just to be able to attract the talent over there and get talent from companies like back then it was MTV and things like that, because it was so difficult to find it in Ghent. And now there's such a wealth of experience and knowledge and also willingness to share this experience and share the knowledge, and great things happening. But I'm always saying Ghent, it's all of Belgium, of course, and it's all of Europe, of course. But where I witness it most in Ghent, it's really exceptional what's happening.
Fantastic. And when we're talking about the mafias and the exits and reinvesting back into the ecosystem, it's really easy when you have an exit like you had with Netlock, like you have in the ecosystems, and then they are being reinvested, the funds are being reinvested into the ecosystem, and the ecosystem thrives, future funding gets going, new companies are getting funded, and so on. But what if the exits are not happening? What if there are no exits in the ecosystem? What do you suggest the ecosystem players actually do?
That's a very, very good question, because that would be a very fucked up situation, right? I don't know what. Maybe we should be saving a little bit more, and I definitely invested a lot of my funds. I think, the vast majority of what I have is in startups and scale-ups now, and. At some point when there's no exits, then there's no exits for me anymore also, and I will also stop. It's going to dry out. So it is indeed a strange thing that is quite important that it continues to go. Yeah, continues to go well. What we don't have, and what you see much more in other countries, especially in the Nordics. You're from the Nordics, or
Estonia?
From Estonia. Maybe also there. It's like there's much more activity on the stock markets. And I'm I regret it. There's been so few successful tech IPOs from Belgium, especially from here, and that's a pity, because that is a much longer term of funds being able to be put back into the ecosystem. It's all, yeah, I really regret it. It's like I've been talking to a lot of people why it's not happening, and I think it's, for me, it's a dream that one of the companies at StarApps or PageDrive or both, preferably even, or multiple companies even, actually go on the stock market, do a successful, not just an IPO, but a successful IPO on the long term. Also, for me, the IPO is like not start very high, but make sure that it's that there's growth potential on the long term. It's probably one of those hidden dreams to be there on ring a bell. I know it's crazy. It's not real anymore even. But anyway, or like get the billboards and or seeing your own ticker. I think I would be addicted to it and always look at the Delta app to see how it's evolving.
That's really good. You actually kind of answered my next question about your dream. So that will be your dream and your advice to all of the ecosystem players. So basically, take the money that you have in your bank account and go angel investing. Is it true?
Well, it's not for everyone. You need to have you need to be an angel. You need to be holy, naive, whatever you want to call it. You really need to do it with your heart. If you want just your funds to make more money, you can just. There's other ways to get there. I know angel investing in the investment strategies, it's not the best one. And of course, if you diversify, and that's what we also do with PitchDrive, of course, it can be it can be more interesting. But I would say it's not for everyone.
Not for everyone.
Let's be honest there. But you get so much back if you are the one who gave the first check of 25, 50K to a company. And you know, there's a huge chance that you'll never see the money back again, and you also have to do it with the intention of, hey, I may have lost it, but I'm really helping these guys to achieve their dream, to build a company. And if it grows, I won't regret it. And if it doesn't work, I probably won't regret it also, because you've helped someone when it was needed, and especially. And that's a little bit difficult with angel investing. If there's like, now sometimes I'm in competition with other angels, things like that. It's like, this is not normal anymore. It's and then they're reducing the ticket sizes. There's like fights happening over tickets. That's not angel investing anymore, to be honest.
That's all the devil investing.
It's like then there's something wrong. The real angel investing is like, no one is giving me money, and can you write me this first check? And I think we can be even more impactful with funds like PitchDrive, for example, to be there in the early stage when it's most difficult, and also have most impact in that phase, of course.
And what would you do to kind of get that IPO stock market in the startup ecosystem in Belgium going? If you could become the minister president for immediately, how would you kind of give that kind of bounce to the stock market in the startups IPO strategy?
That's a very, very tough question, because I'm not into.
You're not minister president.
I'm not in this position, and I'm very glad that I'm not. And it's not really a governmental thing. I think it's not really something that the government has to do. It has to. We need more liquidity on stock markets here. That's the biggest issue. And if you look at Scandinavia, for example, the amount per household invested on stock markets, it's 6 to 10 times more than Belgium. The number of companies listed on the stock market, it's even more in terms of multiples. I think it's even X15 or something like that. I can be wrong, but it's also very, very. So we're underrepresented there. I don't think that's something that the government actually has to intervene in. It's basically the stock market that needs to be more sexy, and the stock market itself needs to, and the financial market itself need to be able to see it again as a nice market. Right now, it's very much concentrated on Nasdaq, of course, and the expectations are also quite high. If you're not in the billions of revenue, we don't look at it. Okay, then it's not going to happen. Of course, I think like these smaller companies that are even sometimes, in their first revenue, but they have big dreams. For me, it would be great if you have a stock market for it. And if people can actually invest in it. And I think we're traumatized. We had some scandals in Belgium a long time ago. And all of the IPOs, they're doing very, very, not extremely well, especially when it's IPOs in tech. So we need to change it.
Okay.
And to be honest, the only thing I can do is to support companies to grow to a phase where they can actually do it, and then
hopefully dream.
Hope indeed that they do it. Indeed, it's for the founders to achieve it. I never intervene with exits and that kind of stuff, so they will have to decide it. But I would be so proud and happy if that ever happens, and I would. I never look back to or listen to podcasts I was in, but I would definitely listen back to this one and say, I remember that in
that's good.
2025, SuperNova.
SuperNova 2025, 27th of March.
Talked about it, yeah.
Yes. I mean, I think that's a positive note that we can kind of close down. And I will ask my last question. Since our podcast is called Superhero Conversations, we identify the superpowers of the ecosystem players. So, Lorenz, what is your superpower? What are you really, really good at?
I think persistence, resilience, and being good for people and believing that they will be good for you when you're good for them. I think that's the where people. I really want to see people with a heart who are authentic, and that's when it's fun. When it's not that case anymore, when it's all about the money and all about screwing each other and sharkiness, I don't like it. So, but it also means that you have to be extremely persistent and resilient in a world where there is a lot of those people also walking around. To be honest.
Lorenz, I think this conversation was absolutely fascinating, and it was really useful for not only the founders, but maybe also for investors, maybe politicians. So thank you so much.
Maybe for you.
Maybe for me. Thank you. Thank you so much.